Bart, what happened to you?
Yeah.
Was the release, the launch, was it that stressful? Where did all your beautiful hair go, Bart?
The funny thing is, you can't make fun of any other body parts than lack of hair. That's
Oh, and ageism. Ageism is
that's
also
true.
okay.
Yeah. That's true. Yeah, I was wondering what's gonna happen. How are you gonna tear me down today?
Tear you
know,
down. I couldn't be more happy to have you back,
Oh,
Michael.
likewise. It's good to be back. Good to be back and listening to the intro music again. Missed it. Missed
too.
being on air.
Me too.
It's one of the better rituals I have.
Let's go.
So today we're gonna talk about some pretty big companies. The $100 million companies.
Plus. Yes.
So what we've kind of been discussing is everyone wants to hit revenue. Obviously, they want to hit that target, and they also want to have a big target. Especially considering what's happening now, it's pretty tough out there still. There's even more pressure to actually hit that target. And or specifically you've talked with a bunch of companies, especially since I've been away for like 2 to 3 months.
Years.
2 years. That's what it feels like. You've had lots of conversations, especially with some of the bigger companies out there, logos that everyone will know. And what I find super interesting is they're following a method or process that leads to them hitting, and it's not really obvious. It's not, hey, growth hack, let's do PLG and add a freemium or something like that. It's not that intuitive.
So to put this into perspective, I don't want to name the specific logos I talk to. Everyone listening here knows all of them. So let's just be very clear about that. And the smallest organization is 200 million ARR plus, right? And the largest organization is, I think, in a couple of billions in revenue.
So these are IPO.
Not this funny, fluffy valuation, thing. No, an actual revenue. Money coming to your bank account revenue. That kind of level. And I kind of had a bunch of chats with a few of them, and that's really talked mostly with, and sometimes they're called VP of revenue ops, sometimes they're called go-to-market ops, and so forth, and chatted obviously with them on how are they hitting target all the time? How is it even possible at that scale with so many different moving parts?
Yeah.
And that's what we're going to chat about today.
Which is pretty cool. And I mean, it's super critical, especially if you have IPO'd. It's going to cost you a lot of money to miss. And obviously also if you have an IPO, the same, because you need to go potentially and raise and so forth. So it's super critical. I think everyone will agree this is something we want to do. And now before we get into the solution, there's one thing we should get out of the way, which is maybe you're not working at a $1 billion company yet. And the things we're going to do is it going to work out for them?
So that was actually one of the really interesting findings and aha moments from those conversations. The methodology of how they're going about it, very much something that everyone can copy and use. You obviously struggle to have a team of 10, 15 people only doing that, right? You need to find a way to scale it down and either do it with one person or a tool or something like that. But generally speaking, the approach that they're taking in order to hit those targets, I think this is something that's applicable generally speaking.
So we're a couple of minutes into the episode. Let's jump into what are they actually doing? How are their process and methods different in order to hit revenue?
No, exactly. Let's jump into it. So, and I think really thinking about it, it's no surprise. It does split into two major approaches or steps. One is really about generating a great plan to begin with. And generally speaking, the way that they need to think about it, simply because it's such, those are really big organizations.
Yeah.
They in step one, they need to actually think about TAM, how many more people are there that I can sell stuff to. I think this is less so a problem for some other folks listening here. I gotta say though, when I was at Plan Day, we did hit some of the TAM problems in local markets after a while, by the way. So the TAM is not just a Google and Facebook, so I didn't talk to either of those. Google or Facebook problem, it's it might hit you much earlier than you think problem, right? But usually kind of the TAM lens to the problem usually is then augmented by them doing some M&A and so forth, and then TAM expansion, all of that jazz. Don't want to go too much into this. But there is, generally speaking, a process that's being kicked off in June.
Early.
June for next year. So this is I think this is the one thing that people might not need to copy here necessarily. But obviously, when you have 1,000 or 5,000 or 10,000 employees, you kind of need to start thinking about this fairly early on, especially with all the in some cases when you're public, with all the expectations that need to be built around this, right? Yeah. So you start this in June, and basically what the teams and so on is led by finance, usually kind of that kickoff, right? And they're usually managing that in a funky way, where they're basically not necessarily giving the bottom up team, so finance has a top down understanding, and then the bottom up is built by revenue operations, go to market operations. These folks in almost every single case that I talk to. They're not giving them actually much guidelines sometimes. As in one case, there was basically like, what do you think you could do? Dear VP RevOps next year. Tell me about that. And some other cases, there were some more guardrails around it, where someone basically, hey, we want to grow 30%, 50%. How would you get there, right? So there's a bit more of a guardrail kind of approach around it. But usually those guardrails are held extremely fluffy and extremely wide, because what basically you wanna achieve here is that you have two different teams, finance and revenue operations, going at the problem with two different approaches. They will obviously come to two different results, but they will come to things will be found that the other team isn't finding, which is kind of a funny approach in this sense. So basically, what then happens, revenue operations does the straightforward bottom-up model, right? They start, churn and upsell in all of those different regions. That makes total sense. We can, model this out. We understand that. Then they take usually what are the existing revenue streams that are stable, so to speak, right? Where you have a very clear path, a historic data set of how it has been developing and how it's going to be growing forward. You very clearly know what the inputs are in order to achieve that. And then you have things that are a little bit less clear on the new business side, that, might be incorporating a new acquisition. And in bigger cases, it might be going into, new markets, new segments, and so forth, right? What obviously drives a bunch of complexity in those organizations is that they don't only have the dimension of, 2 or 3 different regions and 1 or 2 channels. They have all of that stuff plus different segments, because they already are an SMB, mid-market, and enterprise. They don't think in regions. They think in markets in terms of, Germany and France and UK, not in EMEA. They think in terms of, especially when you're at that scale, you will not only have a single product approach, you will have a multi-product approach, and you will need to understand how all of these different products across those different regions, etc., how they're behaving and how they should be behaving, right? So there's a lot of additional granularity necessary to build something out like that, to some degree can be simplified for smaller organizations. And in the case of, for example, multi-product, small organizations just have one product. It's kind of easier to figure this out, right? So there's a lot of that stuff going on, figuring out how the whole revenue plan comes together and what the number is in the end. And then there's really the moment of truth where those two models are being brought together.
It's kind of like a Tinder swipe. Is there a match?
Yeah. But I think, again, in this case, usually finance plays kind of I don't have a good dating app comparison here. I'm sorry. So I was trying to figure this out. No, but finance kind of say, hey, show me your stuff first. Right? So that's kind of how it works out. And then there's well, they think they can grow much more in that region over there.
Mm.
We didn't know about
Yeah,
that.
yeah, yeah,
You know,
yeah.
there's a little
Yeah.
bit of that approach happening. And then obviously the best of both worlds
Yeah.
is being taken forward, obviously. And as in all cases, now there's always a gap.
Yeah.
You know, finance always wants to be bigger and faster and all of that stuff, and revenue operations much more tied to, well, there's this reality thing happening here, and we also will need to be, we will be held accountable for that number as well, right? So there's a bit more caution on the side of revenue operations, or than it is on the finance side. Finance side usually feels in those conversations more connected to the board and the shareholders that
Yeah.
basically always want more.
Mm.
Period. Revenue operations is a bit more rooted in what can actually be done,
Yeah.
and that rift really then comes to a head. Then, you know, when those two approaches are being compared, and then there's a gap identified.
Yeah.
Right? And that gap conversation, in some cases, someone said to me, obviously there will then be some assumptions around how things might behave versus not, right? So this very much assumption-driven approach of that conversion rate. We assume that conversion rate magically will go up by a couple
Yeah.
of points. And this one gentleman I talked to, he basically said like, well, at some point, we get to a point where we say we disagree but commit.
Yeah. 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 Disagree and commit. Yeah.
So I really like that. As was actually, for me, it was the first time hearing that. But basically, the two teams saying, "Yep, you know, you want this," and obviously finance, you in the end you will have the last say, so to speak, and we need to somewhat agree with that assumption. We don't agree that it will happen like that.
Yeah.
But obviously you can't carry that that rift forward. You need to, you know, lock in and, you know, shake hands. That was one specific piece mentioned, and then something else was, which I find super interesting, is really this. Well, finance, if you want more here, you need to give me more money here.
Yeah.
Yeah, and really have this very logic-based approach, because I do feel settling on an assumption, basically, again, like how a conversion rate might change. Let's just stay with that super simple argument.
Yeah.
It's the cheapest way to get out of that conflict when you think about it,
Yeah.
right? Because there's no hard data around that will happen. They're the experts, revenue ops. They're those experts saying, well, we don't believe that's actually going to happen. And for it to happen, you would need to invest something, time of an existing team, new
Yeah.
hires, something else, I don't know what, in order to actually get that assumption to you know, be fulfilled in the end. And this other approach is much more interesting, because suddenly it costs something also for the finance side,
Yeah.
right? If the finance side wants that assumption to be achieved, or if they want to have more revenue or something like that,
Yeah.
then basically RevOps can say, yes, let's do that,
Yeah.
but I need X amount of budget in order to get to this point.
Yeah.
Right? And I think what is really interesting is how, you know, how this is very much a data-driven bottom-up,
Yeah.
you know, blah, 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 approach to revenue planning, which obviously we from the Growblock side very much agree with. And it's being lived in those large organizations, and really kind of that rift between finance and the top-down pressure, and revenue ops, the bottom-up piece. You know, we see that in 5 million euro companies, and apparently now we're also seeing in 1 billion euro dollar companies.
I think what's pretty cool about the approach is because it's two very different views on how revenue is generated. We've talked about this before, right? The financial plan won't tell you how you're gonna get there, but it tells you other things. They will know things like how the cash flow, you know, varies over time, and that might be a factor that needs to be accounted for in the plan.
Yeah.
And they might have certain efficiency metrics that you don't when you run and do the bottom up,
Yeah.
right? So I think there is immense power as an organization in doing that. It's almost like a, you know, silent auction where you don't know what is being bid, and then all the cards are put on the table.
Yeah.
And then that replanning to me seems incredibly powerful.
Yeah. And so one logo I talked to, everyone here knows them as well. They're currently a little bit in the news because they're going through a rough time, actually. And I talked to a former go-to-market planner for them. And what came out there was really that organization has a very, very, very top-down process only, very little bottom-up. Basically, you go from TAM and TAM expansions, aka acquisitions, break that into the different geographies, and those geographies then get labeled territory, and then it's just a territory management for the AEs, an AE manager to stack against that. What that approach is fully lacking, and that was also the conversation I had with that gentleman, was this really big question of, so how is all of that spreadsheet demand landing in AE's inboxes?
Yeah.
And how's that how's that step really happening? And he was like, yeah, that was a big problem. And then that company obviously is extremely successful and has been riding that wave for super long, very successfully. And I think they're stumbling a little bit into trouble right now. And I think honestly, I mean, they don't need to take my word, but I think some of the planning approaches that some of these other really successful companies are doing, they're also probably, in terms of size, probably only 10-20% of that. I think would probably help them to get out of this crisis right now.
So I think the first learning and takeaway for how they hit is really running a top down and bottom up, which should be doable. You can figure out what scale you can do it at depending on size of business. And so on.
the first step really is to build a solid plan while knowing, and that's mostly revenue operations, while knowing that regardless how solid the plan is, it's never actually going to happen like that.
No.
Yeah. And I think that's kind of pretty cool. And also from the perspective that revenue ops versus finance has, finance has this, well, now we're done with the budget. And especially in those companies, I mean, we're talking pre-IPO, IPO, or even on the way back to being privately held. Those companies, they literally cannot change their budget. I mean, theoretically they can, right? But what happens to your stock price when you go out and basically, the term is lower guidance. When you go out and say, we said we're going to do, I don't know how many hundreds of millions in revenue, it's actually going to be a little less than that. That is usually a big problem. It's penalized a lot in the market. And also when you're pre-IPO and you have that happening around the time, you basically, in some cases, you basically need to pause your IPO process, right? So the budget cannot be touched. Whatever is being agreed upon later and happens really later, the budget cannot be touched, which really has this mentality of, to a degree, through that process, finance needs to kind of say, no, this will be the plan, and that's exactly how everything will be going. Revenue operations very clearly is, that's the best guess stab at this, and that's how it probably will be going, right? Which then kind of leads us really to the execution side, or the observability side, almost revenue observability, kind of in that sense. But really, the approach here is, okay, we have 1st of January roll around. We communicated this plan across the organization. We gave some people to participate. There were like varying levels of degrees of how to build consensus around this. And then it's really execution time, right? Planning is done, budget is done, everything is done. Now let's go. What usually happens is that Q1 basically goes according to plan. More or less.
Surprise.
More or less, right? And the reality is, well, congratulations, you were able to look 3 months into the future. And no one is surprised about that. Q1 usually goes great. What one specific team was doing or is doing was basically, Mikkel and I, we talked a lot, and Bart as well. We talked a lot about MBRs and QBRs and so forth. That particular team is basically doing weekly business reviews to the C-level of that public company. Think about that. Every single week, the VP operations persona on a call with C-level of a publicly traded organization.
Yeah.
And in that call, going through the main pieces of basically the steering of the model, and giving a traffic light system on what's on track, what's not on track. And if your corner of that organization lights up red, suddenly there's the what is it, the eye of Mordor kind of. There's suddenly a lot of attention on you, and then there's like, well, okay, cool, how are you going to get out of this? What's the problem, what's keeping you from it, and so forth, and tracking that. And obviously the discussion around that is kind of limited and probably that hour of a weekly call, but still, right, that's the level of steering going on. And if, when you think about it, this is like a multiple thousands employees organization. When top management spends an hour on this per week, first of all, it sends a message throughout the whole organization, number one. And number two, well, there's a bunch of people that need to prepare that stuff. And by preparing, they're like, my traffic light is red. or it's yellow. And the dread already starts then. It's not when the report is being gone through and stuff. It's like, no,
I mean, we've been there. The pro move is to try and even preempt the meeting, saying we know this is happening here. But so actually, what I wanted to ask is, what are they tracking? Are we talking only KPIs, or is it also like bigger strategic initiatives?
So it's it didn't get into that deep level of detail, but number one, it's metrics and KPIs that basically make up the backbone of the model and the plan. In that case, it's different conversion rates, it's different product lines, how they're behaving, different regions, different segments, and so forth. So I don't know the specifics on this. And surrounding that, then also some bigger strategic initiatives, right? Whether or not that might be incorporating a recently acquired company or something like that, right? Kind of those things kind of happen there. Don't know to what detail, obviously, though, right? And again, I think the point here really is around the visibility that's being created, and then the accountability coming out of this throughout the organization.
So I think the point is really they have a system to monitor progress. It's not just annual kickoff and then annual review. They're intermediary steps that needs to happen. We've talked about, like you said, QBRs, MBRs in the past. Really great tool to kind of have your hands on the steering wheel.
Yeah, and if you will, right, what they're discussing there, to a degree, that's the post-mortem conversation that people that have only a QBR go through at the end of the quarter or after the quarter's ended. But instead of making them post-mortem, they're basically having it immediately when it happens, which then allows them to, something is going, from green to yellow. What's going on? Why is that happening? Basically a triage around it. And then, okay, so this is now the action plan of how we want to fix it. And potentially, maybe we need to reshuffle some things, which is kind of the next piece here, actually.
Observing deviation. Oh, what? No.
So basically, once you see some of those deviations happening, right? Once you see the gap widen, and this doesn't happen in Q1, it happens at some point later. You basically get to the point where it's this light has been red on the report now for a couple of months. And then there's a bit of like, okay, I don't think this thing is going to go back to green anytime soon. So what's the revenue impact of that thing? That's X. And how can we fix it? How can we still get to target, despite this thing being red? And then really the conversation is very much about potentially leveraging other pieces of the organization, or giving more or less budget, moving things around. Again, within the confines of the budget, right? At the end of the day, no one will care if revenue number is being hit, but the way to get there, so the budget below has a bit of reshuffling, and EBITDA, so profit is being hit. If top line and bottom line are there, investors don't. I mean, I'm just saying this now, but investors don't really care how you got there in the end. For finance, is really important because every month they're being asked of, why did this number deviate from the plan by how much percent? And then you need to explain. But at the end of the day, as long as you're hitting those top and bottom line parameters, I think everyone is happy. So really, what then needs to go on in that slight replanning or readjustment is figuring out how you can shuffle those resources in a better way potentially to still hit that target, right? And I think this is some of the insane superpowers when you think about this approach, which very much is, well, you get early warning signs immediately, right? Something is turning yellow, you immediately jump on and fix it. And if something kind of widens too much, you might need to do some recalibration. But in that case, it's not like, oh, we are behind on hiring, let's hire more. Because you know what the revenue impact is, I don't know, 5 million, you basically now can go out into the whole organization and figure out how can we find 5 million.
Yeah.
And it doesn't need to be one initiative. It could be 10 initiatives that in total give you 5. But really having that approach basically ensures those companies that they will hit this, within 1 or 2 points margin, will hit that revenue target in the end, right? So the planning piece is all good and dandy and fine. And I think RevOps has a lot to contribute there, especially from a finance perspective, to make this even a realistic plan. The magic comes from when you then have that somewhat realistic plan. It's still not perfect. The magic comes from tracking it extremely closely, seeing early warning signs when something is slightly veering off course, catching it immediately with the person responsible or the team responsible, and then having the ability to basically fix the issue. And we're talking conversion rates in a funnel to fix the issue before it actually materializes in the revenue number, right?
Yeah.
And if you think about this, and I think this is something that people should be taking away here, and when you think about having a quarterly review cadence, the things that pop up throughout the quarter, you basically will be too late in fixing them after that thing happens, right? So if you have a 3-month sales cycle, let's just say it's something like that, you could actually see the early warning signs appear in month 1 or month 2 of that QBR of that quarter. You can now start immediately when that happens, course correcting, fixing, or if you can't fix the issue at hand, you can come up with another thing that maybe could close the gap, and then getting close to the original revenue number instead of not fixing it, not seeing it in many cases. By the way, that's really the big problem. Not seeing it, then walking out of the quarter being, we missed. Why did we miss? And we could probably have, fixed that if we had known about it,
Yeah.
And I think this is what those organizations are much stronger at compared to other teams. Basically, kind of having that insight, having that ability to then move around tactics and tackle this immediately.
I mean, it's kind of clear you need to have that system in place to monitor progress in order to get there, right? To have that time on your side and become agile. We kind of joked about it a bit the other day. You have a sales manager behind track asks the RevOps person, can you help me figure out what's happening?
Yeah.
2-3 weeks later, then there's already a decision made when the report arrives. It's too late.
No, that example is really about how currently many teams are operationalizing this.
Yeah.
It's like a sales manager or VP is like a gut feel. I've been there myself, by the way. I have a gut feel. Hey, can you check this out as an ad hoc report for that specific thing? And then, 2 weeks later, because those reports, they do take some time. And it's not like RevOps doesn't have anything else to do at the moment. They come back and either say, usually they say, nope, it's not it.
You're wrong.
and then okay, let's do another gut feel.
Yeah.
And the other approach is very much, well, there's the triaging, the diagnosing, the seeing of symptoms and treating of the disease.
Yeah.
That really happens immediately. So you save all of that wasted time and to basically kind of course correct.
Yeah.
And then not see that impact hit revenue, right? And it's so funny how time sensitive some of these things are.
Oh, yeah.
The longer you wait, the larger your gap basically will be on the revenue side.
Yeah. So I think we should maybe just try and wrap everything up together here. We've been through a couple of things. So the whole planning element.
Yeah, so I think number one, again, those are companies in the hundreds of millions of dollars.
Yeah.
They're very good at hitting those targets. It's insane. And I think the methodology that they're using can be used from very small beginnings.
Yeah.
That's basically how I see it. There's a very clear finance revenue ops relationship in the planning process, and this is really about creating a best possible, most realistic plan. And then there is a instrumented system that is in place in order to alert you on, hey, these things are going off. You need to fix it right now, right? And I think this is where revenue operations plays a huge role in instrumenting that and making sure that commercial leaders and decision makers can actually react to that super quickly.
Wonderful. So I hope there's going to be a lot of work happening to instrument some of this stuff.
Yeah.
And hopefully, I mean, the plan is already done, if we're being honest, for most companies, unless you're, years push or whatever.
Fuck the plan. I think that's usually kind of over now.
Yeah, it's replanning.
Yes.
Being able to monitor and get some alerts if things start sliding.
Yeah, I think if people are listening to this and a bit antsy now, number one, one thing you might have screwed up already is that finance was leading that planning process by themselves. So basically the plan is so unrealistic. It's not about the eventual revenue number. It's about how you kind of get there. It's so unrealistic that basically all your measurements are red right now.
Yeah.
So that means you would probably kind of need to do a replan in this. But the other side of the coin is really, okay, whatever has been planned, where are we on track? Where aren't we? And I think some of those conversations, should happen monthly.
Yeah.
But I think also some of those conversations should happen once the trigger, once it happens, right? Once something veers off course, and then it should basically alert you and say like, boom. Right?
Yeah.
No, I mean, so obviously what was really cool for me as a founder, talking to all of those folks, it's like, yep, the way you guys are doing it, we're building exactly that. So that's wonderful.
You're stitching in a small pitch there.
Of course.
I think we can leave it at that.
Was that a small pitch?
Well, if you've listened to this entire episode and listening to this, you can go and check us out, Roblox.com. We can help with some of that stuff.
You can probably help with some of that stuff.
Wonderful. Good to see we're still in
so
sync.
Nice to have you back.
Good to see we're still in sync. Haven't forgotten how this works. I was a bit, hey, do I know how to set this up still?
And you clearly didn't.
No idea. I had to get Bart.
Yeah. Wonderful.
The substitute. Thanks,
Thanks,
you, Tony.
Mikkel. Thanks
for
everyone.
listening.
Bye-bye.
Bye.